You know that feeling, right? Staring at a failed prop firm challenge, that pit in your stomach? It's the worst. Well, if that's you, stick around. In the next few minutes, we're going to tear that frustration apart and show you the system to not just get funded, but to actually build a real scalable trading business. So let me just start with a confession. This was me. I blew through seven prop challenges before I ever got funded. And let me tell you, it was brutal. It felt like I was just setting money on fire. But this isn't just my story, it's the hidden reality for so many traders who think they're doing everything right, but are still failing. So what was the real mistake? You know, for the longest time, I thought it was my strategy. My entries were wrong, my stop losses were too tight, something technical. But the actual reason I failed 7 times, it had nothing to do with my charts. It was a fundamental psychological trap, one that almost every single trader falls into without even knowing it. And here's the trap. I call it the psychology of one. It's this deep-seated subconscious belief that this one challenge, the one you're on right now, is everything. It's your entire trading career, your one shot at the big time, all rolled into a single high-stakes bet. And when you pin all your hopes and dreams on that one account, the pressure is just, it's insane. Every little tick that goes against you feels like a personal attack, a total failure. This is what pushes you into those classic account-killing mistakes, right? You start over-trading because you got to hit that target fast. Or you take a loss and immediately jump back in to get it back, classic revenge trading. You've basically set yourself up to fail before you even place your first trade. So okay, how do we break out of this trap? Well, it takes a complete mental shift. We have to stop thinking like a stressed-out trader who's glued to one screen, and we need to start acting like a calm, calculating business owner who's managing a whole portfolio. And this just shows the difference perfectly. Over here on the left, you've got the trader mindset. All your focus, all your stress, all your pressure piled onto one single account. Now look at the right. That's the business mindset. You've got a portfolio of accounts. The performance of any one of them is pretty much irrelevant. The only thing that matters is the overall health of your entire portfolio. So in this new model, you gotta reframe everything. Those challenge fees, they're not losses anymore. Nope, they are a business expense. Think of it as the cost of inventory. And the payouts, that's your revenue. Your goal is no longer to pass one specific challenge. Your only goal is to make sure your portfolio's revenue is bigger than its expenses. It's just simple business math.
Okay, let's actually run the numbers here, because this is where it gets really cool. Imagine you go out and buy a portfolio of 10 challenges. They're $80 each, so that's an $800 business expense right off the bat. Now, let's say you have a totally reasonable 60% pass rate. That gets you 6 funded accounts. And let's be super conservative and say you only get a payout on half of those. That's 3 payouts at $800 a pop, which is $2,400 in revenue. You subtract your initial $800 expense, and you're left with a $1,600 net profit. You literally failed on 4 challenges and still walked away way, way ahead.
And this right here, this is the new goal. It's brilliant. You're not trying to get rich from one lucky account. You are aiming for a positive return on investment and ROI on your challenge fees. In this example, that's a 200% ROI. For every single dollar you spend on a challenge, you're making $2 back in pure profit. Now that is a business model you can scale. All right, that all sounds great in theory, right? But the whole business model hinges on one absolutely critical piece of the puzzle, your pass rate. And this is where we find out that the strategy most traders are taught to use is actively working against them. So let's put 2 profitable strategies head to head. On the left, we've got the really popular high risk to reward approach. Looks great on paper, you know, but it usually comes with a lower 40% win rate. Then over on the right, you've got a high win rate strategy. The R to R is lower, sure, but you're winning 75% of your trades. So which one do you think is better for passing these challenges? The data here it's actually shocking. If you risk just 1% per trade, that high RR strategy gives you a 73% chance of passing, which, isn't bad, but you're still going to fail about 1 out of every 4 times. But now look at the high win rate strategy. At the exact same 1% risk, your pass rate skyrockets to 99%. It's virtually a guarantee. And the reason is simple. A high win rate strategy just prevents those long, painful, demoralizing losing streaks that are absolute account killers. And here's the hidden cost, the thing nobody talks about with that high RR strategy. It is slow. To get a decent pass rate, you have to risk such a tiny amount that it takes forever to pass.
We're talking an average of 27 trades to hit the profit target. That could be an entire month. A whole month of grinding and psychological pressure on just one account. Now, let's flip that. Compare that month-long grind to this. With a high win rate approach, you can pass in an average of just 5 trades. 5. That speed, man, that is the engine that makes this whole portfolio model work. It means you can fail a challenge, pass another one, and get a payout all in the same week. You're cycling your capital with incredible efficiency.
Okay, so you've got the business model. You've got the right strategy, you're passing challenges. Awesome. But now what? How do you actually scale this thing into a serious income? Because this is another spot where most traders get it completely wrong.
Now, this next part is maybe one of the most important concepts you're going to hear. It's a little counterintuitive, but stick with me. Once you have a system that works, your job is not to chase bigger and bigger percentage wins. Your job is to increase the amount of capital you're trading. A small, consistent percentage on a big account is worth so much more than a huge, risky win on a small one.
So, what's the roadmap look like in practice? It's actually super simple. You start small with like a 10K account. You get your first payout, and you don't go on a shopping spree. You use that money to buy a bigger 25K challenge. Then you just repeat the process. Use the payouts from the 25K to get into a 50K, then a 100K. Before you know it, you're stacking multiple large accounts, and you're building a true portfolio of assets.
Okay, this brings up a really practical question, right? I mean, it's one thing to say have a bunch of accounts, but how in the world do you actually trade them all at once? You can't be clicking buttons on 5 different platforms at the same time. It's just not going to work. Basically, you've got 2 main choices here. The first is a trade copier. It's aggressive, it's high leverage, and honestly, one bad week can wipe you out completely. The second, and the much smarter, more sustainable approach is what I call account rotation. You simply focus on one account at a time, get it funded, get the payout, then move on to the next account in your portfolio. Simple, calm, and sustainable. And please, listen to this one. This is a critical piece of risk management. You cannot put all your eggs in one basket. You must diversify your prop firms. If one firm suddenly decides to change its rules or just disappears overnight, your entire business doesn't go down with it. This is non-negotiable if you want to protect your capital.
All right, let's bring all of this together now, because what we've been talking about, it's not just a few tips and tricks. This is a complete and total shift in your trading philosophy. You're no longer just a trader. You are now an asset manager.
So let's just hammer home the new rules of the game. Rule number 1, you are running a business, not gambling on a trade. Number 2, your strategy is built for a high pass rate, not a high RR. 3, you scale your capital, not your profitability. And finally, the most important rule of all, a single account is completely irrelevant. Only the portfolio matters.
Look, getting that very first payout, that's the hardest part. I'm not going to lie. It's not really about the money, though. It's the proof of concept. It's that moment when something just clicks in your brain and you finally, truly believe that this is possible for you. I promise you, after you get that first one, stacking the next 3, 4, or 5 becomes infinitely easier.
So, I'm going to leave you with this one question. I want you to take a hard look at what you're doing right now and ask yourself this. Are you just trading, or are you building an asset? The choice and the opportunity is all yours.